Welcome. Good morning, everybody. Today, what a heck of a day we're having here. This is the person Algo room. We have two trading rooms. One, we have our stock positions and options. We project with Thinkorswim. Current positions long $10 from GE, or long GE from $10. Just starting to build a position in Hess Occidental Petroleum. Took profit today on extremely positive earnings on Philip Morris. Trailed our stop up about 8% on that trade. Now, again, we can transpose the stock trades that we choose and put in option strategies, which we do. But what I wanted to focus in on right now is what is the current state of the market? What do the indicators suggest? What is our algos doing right now? So this is the Algo 17 version 2. This allows us to program whether we want to be long, short the market, take both long and shorts. It's very, very dynamic. I've been posting some YouTube videos on this. This is the live trade room right now today. And if I may point out that this is, we started off the box today with a short in crude oil. It got out of half the position at a profit, trailed the stop, got nicked out, went with a profit, of course, got short again, took a profit, and it is currently short crude oil, short out of the two contracts that it went in this morning at 56.64. You can see it's still short one at 56.64. We're up $1,100 on that one position. Now, what is this trade actually, or these indicators suggesting? Well, number one, when this is a 5-minute chart, when it is gone from a white from red, it suggests that one time frame, this is a dual time frame, double dimensional indicator that's color coding these charts. When the 5 minutes in a buy, but maybe the higher time frames in a sell, and that higher time frame can be chosen, by the way, by individual users. So you don't, it's not like we jam 5 and 15. If you want to only take signals on 5 and 60 minutes, then you can. When the market goes from blue to white and you generate a sell signal, notice that the volume action down here is negative. This is our person proprietary volume indicator. It's exclusive for TradeStation, and only VIP clients get this. This is a momentum percent change in volume. It is not a price-based indicator. It is a volume indicator. So when the volume is directed down and you get a sell signal that's positive, what do you want a system to do? Scale out at a profit and then trail a stop on a balance, and that's what it did. But it made its criteria again and suggested, hey, we're still in a bearish mode. The volume went negative again. You can clearly see there it is. It lines up with that trade. Scaled out a half the position. You can see short two, now out of one, and it's still trailing. What are these? These are the last conditional change and an ATR function. So this is our trailing stop. So it's going to take a lot in order for this thing to get stopped out, or time, and allows these to catch up. And so I guess our trailing stop would somewhere be down there. So this is a fabulous day here for crude oil trade. Crude oil down, you would think that gold would also be down. Not true. Gold is up. Matter of fact, right now, our trade room, here are live trades as you see them in front of you. This morning, the system went long in front of my morning market briefing. I said we went from a downtrend to an uptrend, and the volume supports this uptrend. You can see the market went up, and the volume is supporting that. We took a little bit of heat. We did not get stopped out. There's your initial stop. It got out of one with a profit, and it is still trailing the second position. How do we know? If you look over here, you see gold still long, just one from the original position at 1420. The market's at 1425.70, 80 now, up 560 on that trade. Spiders, this is for our momentum trade, higher time frame traders. We use a SPY and we have the VIX. The SPY is short the market. The VIX is actually long the market. We have a long VIX position on. So everything here that you see is going on in this trading room for our algo traders. They get to view all of this information in front of them. Now, what is this based off of? All of these, I formed my own indicator strategies based on the Algo 17. Here's the E-mini S&Ps. What do we have going on today? Well, the 5-minute model went short, got stopped out on a trailing stop function, hasn't done any new trades so far today. Our volume does not suggest that this rally would hold up in here, so we'll probably look to see how it handles later this afternoon. What did we create this with? Format strategies. We're going to do a webinar if you're interested in attending to learn more about this product, how we use it and create our own strategies. More importantly, how I train individuals to program their own strategies. That's the difference. So we have time frames that we trade around, as I pointed out before, position size models that you can use, money management, max optimizing, every one of this. What is the max trade loss on a 5-minute E-mini S&Ps that performs over time? Well, let me answer that question simply this. If we have a time frame that we have maybe a 10-day average true range or a true range in the market that is 26 or 27 points, what happens on those times where we get expansion of volatility and our trading ranges now go to 40 points or 50 points a day, or like we did in December where it was 96 points, 96 S&P points times 4 ticks per point. That's what we did in December of 2018. No system can manage that type of risk. You have to alter your max risk on your signals. Otherwise, you're going to have a very short stop and get nicked all the time. So there has to be, and that's what part of this Algo 17 version 2 is about. It helps you to define where and how much risk and where you shouldn't be in the market. Should you be long? Should you be short? By the way, we can break down whether we want to take reversal signals. Like if I'm long the market and a sell signal comes, do I get out of that trade or is that just a false sell signal? Well, we don't know, right? So what optimizes better? In this case, the 5-minute, it tells you to reverse on your signals. So we have all of these different symbiologies. Buy signal, that means it is taking buy signals. Risk reward is 1.22. Moving average confirmation, it only take buys on a PPS if you have a 47 period moving average of the highs and it breaks out above a last conditional change resistance. That's pretty formidable filtering process, but that's what this optimized out. How do we optimize something? Click on optimization, 0 for false, 1 for true, increment true or false, 1. If I click that and I hit OK and I optimize this, and I'll do it right in front of you, you'll see exactly what it does. It comes out and says, oh, by the way, it's telling me to do the same thing and provides trades. This is actually yesterday's model. Yesterday we had some really great trades. I think I shared that with you in the YouTube video. But I wanted to go through and say, well, what's going on today in the marketplace? And what is happening in the market is not a lot. We had one short, it got out, and it hasn't taken any other trades. Volume here doesn't look great. We'll see how this thing produces trades in late afternoon. It is a Thursday after all. And what does that mean? We've had some really dynamic earnings on well, if you're in Netflix and you're bearish, good job. If you're in Philip Morris and you're bullish like we were in our weekly newsletter, great job. It's up 8%. Nice trade. We trailed our stop and we're out. Other than that, we will send an email alert if you're interested, or an email invitation to a what we would call a new traders workshop. And this would be a product workshop so that you can know the dynamics better if you're interested in getting your hands on the Algo 17 version 2. And along with that comes the training. We're also doing a seminar, our annual seminar, down here in West Palm Beach, Florida, in latter part of October. And there are special discounts available still. If you're interested, we can sit there and talk about what we're doing with that seminar, which will be training around this product right here, the Algo 17 Extreme version 2. Thank you for watching. Just lastly, I think the market today in the S&Ps is trying to find some support. I don't think the mid-month correction might not be over, by the way. And what I'm thinking here is if we take a look at the spiders, the spiders are in a little bit of a sell mode. The advanced decline we have today, 230 of the S&P stocks are positive, 266 are negative. To me, that's a neutral day, but I think what we're going to see happen is a retest of the low in here, and more importantly, let's double check here and go to a 60-minute chart on the spiders. Here we go. I think the 60-minute chart, we should probably find support, and I'll just give you this. My guess is, like I said yesterday, I think first and foremost, we got to see what happens if we get near 296. And after 296, then I don't think there's much unless dynamics change. Dynamics meaning the volume as well as the advanced decline. And right now, we've just got a 1, 2, 3 day pullback in a market. It would take for me to get bullish again, and I'll share this with you. We need to see 60-minute closes on strong volume greater than, let's call it, 299. 299 also, you can see there's a moving average up here. We have a little defined downtrend. If we get a close greater, we clear all that resistance, and man, we're going back up to testing new highs. And why do I say that? Well, here's why. Let's look at the daily charts, and then I'll wrap this up. If we hold the advanced declines and we can't penetrate below a rising moving average, prices fell back to rising moving average. That may support the market right there. If the breadth or the advanced decline makes a positive move today, and again, that's Thursday, that negates yesterday's negativity. So today's kind of an important day. We'll find out later in the afternoon. And so one of the things that I'm looking at is not just the volume, it's also the advanced decline, the breadth of the market. And that's kind of important. It's been one of the greatest indicators that we've used in the last decade that's really helped us to stay on the right side of the market. So one of the things about TradeStation, not Thinkorswim, TradeStation, every platform has their strengths, every platform has their weaknesses. We can program and get our advanced decline comparative ratio lines on each individual market like the one I'm trading, which is the S&Ps. After all, I'm not trading the NYSE and I'm not trading the NASDAQ composite. So those are the ones that you get on most platforms in general. You get the comparative ratio lines of breadth on those two. TradeStation, the person's package that I created, allows us to look at the advanced decline in all the markets and the one specific of interest that I'm trading. What is the health of the market? What's lifting? What sectors are moving right now? So technology is getting racked by Netflix on the Qs, but in the financials and the liftoff that we see in the financials, it's helping out with the regional banks. It's helping support today the Russell, which has small cap exposure, as well as the S&Ps. So there's where we have two things going on in this market, and quite frankly, we'll see if we can get some better support, and I'll bring this into your attention. Here is an earnings on Philip Morris, and again, you can see why we went long Philip Morris originally a couple weeks ago. We had a PPS and a high close doji. We'll bring this to your attention. There it is, strong volume and an increase in volume. So that all right there was very positive, and you can see we just kind of trailed our stop up there, and that was a nice job. All right, looking at the rest of the tape and the board today going up and down, where's the strength and weaknesses coming from? Well, number one, let's take a look. Energy today, XOP, VNQ. We have a double top in Real Estate Investment Trust, a potential weekly low close doji. VNQ, huge open interest in the September 86 strike puts. Yesterday we recommended to jump back in them. We bought the 86 puts about 2-3 weeks ago. We took a profit, did a double. Bought them for 105, sold them for 215. We got in half the position again yesterday. We added to or got in a new fresh position yesterday. And I'm suggesting to add to that trade if, in fact, by Friday you close below. We have a low close doji. Look at this chart on VNQ. My volume indicator suggests there's a significant reduction. It looks like distribution is going on, and I see a move back to 85 in the coming weeks. So if you get a close less than last week's low in VNQ, you want some participation on the short side of that trade, and that's something that looks like people were defensive and they were unwinding their defensive positions. XRT, energy, Qs, housing, real estate, IYR, discretionary. Bonds are down today. Another defensive product that people are coming out of. What is going up today? gold miners, regional banks, transports are going up. Financials are going up. Semis are going up. We've got the KIE, which is insurance, biotech, healthcare going up. Those are kind of what we would call cyclical, aggressive stocks for aggressive growth. So we see money coming out of the defensive stuff and starting to trickle into some of these other sectors. So I think the earnings with CSX Rail yesterday being disappointment was completely offset with a huge beat today. And we had Union Pacific. So when we go to the transports here, Union Pacific, UNP Rail, look at this, up $7. So it fell yesterday in sympathy with the bad news on CSX or CNI, Canadian Rails, or excuse me, I was right the first time, CSX. So I think more importantly, it's more of a unique individual stock pickers market in a sector. CSX, there it is. It just had an unbelievably poor earnings report, CSX. So not all are bad in the rail sector. Don't fool yourself. Airline stocks, we talked about this many, many times, and I want to wrap this up right now. Airlines, they reported they were going to have one of the greatest bookings. They had incredible volumes of people traveling. How could you not look at? We know, go back and look at these YouTube videos. I've been talking about the person's relative strength indicator, this PMC tool. It helped alert us to this weeks ago. We were starting to see an increase in relative strength in airline stocks. Now, Jets is not one of the best, most liquid ETFs, but it is a good, I think, real-time indicator that trades versus the airline index. And so you can see way back here in the middle of June, the relative strength was starting to outperform the market in airline stocks. It just took forever. American Airlines, you have JetBlue, we have, again, United Airlines. All of these airline stocks have taken off and are replacing some of the profit taking that took place in rails. It is a confusing market. It's a rotational grind market. And I think we need to be ahead of the game. Instead of watching what did happen, we have to try to anticipate what is happening. Look at money flows. Look at your volume. Look at your relative strength. That's what this whole platform allows us to see. Where's the money flowing in real time? That's the specifics and the specificity of what these indicators, specifically my volume tool, our person's market catcher relative strength tool, and again, lining up everything with our daily and weekly PPS buy signals when they're in sync together. It shows that short-term and high time frames are in sync together. So that's what we've got going on. Look for our product workshop webinar if you're interested in attending that. I think you're going to be more than interested in having your hands on this product. With that said, I thank you for watching. I hope today at least I was able to share with you what we're doing around here in our, again, live trading room community. Thank you, everyone. Have a great rest of your afternoon, and we'll update you on Friday when we get the end of the week signals. Thank you.